Hello and welcome to week number 22 of the year. We're very quickly chewing through the month year. So we're approaching onto June now, nearly halfway through. Starting off this week's analysis by having a look at the CFTC data, and there's a sizable shift in the euro market. There's loads of long established. We're sitting over 5 billion long on the euro side. Net positioning trimmed a little bit as well, and open interest staying quite wide still. So there's a lot of horsepower behind the euro bullish move currently that started to peel from the bottom of about 103, 105. On the other side, we have the pound, where the positioning hasn't really notched quite a lot. So short positioning added a little bit, long positions trimmed a bit, but pound is still trading quite higher. That is probably most likely on the back of how euro is behaving as well. So that is continuing. Some of interest for the week ahead, as the ECB is pointing out, is euro area inflation is expected to come in higher and continue to go higher. Has unlikely peaked yet, which will very likely push the ECB to be a little bit more hawkish. And we should expect some of those drivers to feed through into the euro, specifically against pairs where the other central bank are not expecting to do any strong moves anytime soon yet. In terms of trade idea that could possibly push out towards EURJPY upside, as Bank of Japan is currently sitting put. And further on, we're having a quick look at the calendar. So today, being Monday, we don't really have a lot of data that can entice us getting into the market. US Bank is shut as well. There's a holiday in there, which means a little bit restrictive market movements today. But they will likely change tomorrow as everybody's back online. And we have about 10 o'clock London time in the morning. We have CPI flash estimates year on year. And for that, we're expecting some positive traction to feed through from EURJPY. EURJPY already trading quite bullish on the day. I'm going to bring up quickly the weekly just so you can visualize what happened. Some of the biggest moves for EURJPY happened in the back of February. So that's when the whole hawkishness started from the ECB. Unfortunately, then the war happened in the Easter theater, and that plummeted the thing. But it's still going punching strong. We're expecting this trend to continue. As you can see, we are right now pushing last week. You can expect some sort of a reaction there, as you tend to see things when you're trading at these highs. But beyond that, I am expecting that it should stay constructive. If I go down to a bit shorter time frame, it's difficult to imagine which level we'll be trading tomorrow by around 10 o'clock, but we are constructive on this currency as the central bank, ECB is turning very hawkish aggressively. There will be hiking rates in the summer for the first time in a very, very long time. And that is feeding through from a central bank divergence. It's playing into the hand of euro against JPY. So that will trade I will be engaging with tomorrow. Before or after data, it's still to be decided on. As the day rolls on, we have a better understanding where risk sentiment lies, and we can take that and harness that to find better setups. Even beyond that, the calendar doesn't really give us a lot to work with in terms of volatility. So on to Wednesday, we will have to gauge what risk sentiment is for the day and take the trades from there. We will have the Bank of Canada have interest rate decisions, and also ISM manufacturing PMIs for the United States, and ISM services, which I'm quite interested in on Friday. So you should see some big traction on USD/JPY. One of the key movers right now for a lot of these yen pairs is also US yields, and US yields are sitting not all too bad. It's holding the highs, which is very promising. Originally, we thought this is going to quickly plummet lower, but as long as we can see that US yields are holding these highs and standing proud, it's likely that we're going to see more yen losses. So keep an eye on that. If you see a quick switch in the movements in the yields on the bond market, we're very likely going to see the ripple effects in the cross currencies against the Japanese yen as well. On the other side, from some other major market yields, the GBPAUD yields trying to keep hitting the 0.25 level and keep getting pushed back. That's one of the main reasons why yen is staying weak as well. In the UK yields, gilt yields, I should say, are pushing highs again. Canadian yields are more in tandem with what the US is doing. German yields are comfortably staying above the 1% level and are looking north, which is quite positive if you're looking to buy EURJPY as well. NZD and AED are very likely continuing the pattern that we saw earlier as well, and it's unlikely we see peak yields just yet. looking ahead for the rest of the week again. So Tuesday we will have EURJPY to look at. On Wednesday we need to gauge what sentiment is and how market reacts to the Bank of Canada rate decision. On Thursday, I'm very interested to see how market reacts to the ADPs and also unemployment claims. There has been some really good market movements around the unemployment claims, specifically around indices. So last week, continuously said we want to buy the S&P 500 as it was turning very, very bullish. We are at these lower levels, targeted about the 41 level, and beyond that, we're still looking bullish. So that's not looking to turn. One of my key gauges right now for the S&P 500 on the daily chart would be the VIX. The VIX is currently looking quite bearish. Term structure is flattening out, and that's very likely.
To nie jest wpuskaj to. Sutycznie boxu go wpuska.
So if I bring up the VIX just now. VIX trading quite bearish. It was around these levels where we noted that VIX looks exhausted. We're looking to flatten this out. I am on the mind that we should be able to see VIX start trading towards the 20 level again, which would be very bullish for the S&P 500. That's the direction we'll be taking as we are turning the page on May and moving on to June. And I'll be using Thursday's data as a volatility guide to enter those trades as well. And then moving on to Friday, we'll have the NFP. NFP is expected to come strong, but we're not sure yet how that will affect the USD. As I showed you in the CFTC data, market continuously is buying euros, and that is not good for the US dollar. Some analysts suggest, and I bring up the dollar chart just now, some analysts suggest that dollar could be headed towards the 96 level, so the Dixie, about capped on these levels, and is expecting this to drop all the way back down to around these levels where it was in late February, early March. So around here, that could be quite detrimental. It's not actually a huge move if you take into consideration that most of this move was mostly liquidity, shortages or liquidity searches, a lot of to do with what happened in terms of market was moving back into cash, but that scenario seemed to have played out for now, and it's not as aggressive anymore. And it looks like that the dollar bulls are right now in retreat. So we'll have to take this with a little bit of pinch of salt, considering that dollar is still quite strong. Yields are much more better priced than some of the other economies, specifically Europe. But for the time being, if Euro bulls keeps adding in an environment where dollar bulls are in retreat, this scenario is going to be very likely an outcome we have to consider. I don't think dollar has topped just yet, certainly not. I think there's still more to it, but I think there needs to be a bit of a dynamic of positioning playing out before we're going to see another move higher. And that, again, I'd like to take you back to CFTC data here, just showcase that how the dynamics work in terms of positioning. So usually what you see is, I should actually show you this bar chart, makes a little bit more sense. Usually what you see is you see extremes and you see this trough, and then when you one of the ends, you will try to capture the opposite. Usually when you hit resistance in the CFTC positioning or aggregate positioning data, I should say, you will find that reversed mean reversions works really well. As positionings climb down, they get washed out, and as it drops down to these negative levels, it's time to buy again, and so on and so forth. Now, and as we're moving into the summertime, where dollar will be trading is a little bit 50-50, but with the information we have available just now, and the sentiment and the news headlines, they're pushing us towards believing that dollar is a little bit on the back foot, and levels lower that I just pointed out is certainly possible as we are moving into the next few months or so. I will be staying very nimble because I'm still a dollar bull for reasons no other than there's QT in the United States, and every time I've seen QT or quantitative tapering, is the dollar liquidity gets drawn out of the market, and there's a dollar shortage, and dollar just by default keeps moving higher. Something similar we saw here most of the year. So market was pricing it ahead of time. But maybe in the short term, there's going to be a little bit of a blip. So I have to take that into consideration, stay nimble to be able to trade effectively. There's one last thing I'd like to show you in terms of In terms of trade ideas, that's GBPAUD. I should probably show you this on the daily. So here we are on the daily. I've beaten this nearly to death. So we're trying to get this short, and I'm quite aggressively short on an idea basis, and on an analysis basis, we're really aggressively expecting this to come down and fill this void here, which is still a good. From here on, it's still a good 150, 160 pips away. I'm expecting this to continue, hopefully some point this week, if not the next following weeks, to continue filling that. So that's a wonderful swing idea trades that still has got value to it. That's all I wanted to cover in this video. I'm wishing you all a successful trading week. I will be communicating every single trade in the chat room as usual, and the position sizing, entry and exits. And hopefully we're all going to have a successful, profitable week. Thanks everybody for joining. I will catch you all again next Sunday. Thank you very much.